Hello, everybody. It's your realtor Dion here, working from home today, and I thought I would crank out a little bit of information for you guys. Being a realtor for almost 7 years, it'll be 7 years next month, y'all. I can't believe it. It's been a wild ride. But being a realtor for 7 years, I've run into everything. Well, just about everything, because there's always something new that's happening with every transaction. But a challenge that I see a lot are folks who have graduated college, are into their careers and doing well, but they have high student loan debt. And the challenge that comes with that is if you're wanting to pay a low down payment like a FHA mortgage, like 3.5% down, you will have to use about 1% of the total balance of your student loans to basically count towards your debt to income ratio, and that throws a lot of people's ratios off. So that kicks them out. Now, if you have a higher credit score, like over 700, maybe 750, 720, you can probably do a conventional loan. They're a little bit more lenient as far as how they work the numbers. If you're on a repayment program, a lot of times you can get a loan and pay 3% down, 5% down. They have first time home buyer programs if you have really good credit over 700. Don't quote me on that. I'm not a lender, I'm a realtor. But, for those who don't have that higher credit, say your credit is in the mid to low 600s or, low 600s, maybe even to the fives, but you have great income, your student loan debt is just high, but you still want to own, there is something for you. There are a couple programs I'm going to talk about today that are called basically lease to own programs, lease purchase. And I get a lot of people who ask me about these programs. Now, I will tell you up front, if you don't have at least $1,000 a month that you can spend on rent per month, these programs aren't for you. Because these are homes. So these are not apartments, these are actual homes. And the premise of it is these investors will go out and pay cash for the house. You get to pick the house. So you'll get a realtor, such as myself, to take you out to look at homes. You pick the home that you want, and then they will pay cash for the home, which is also going to put you at a great advantage in this market, in the spring market, and the market period here in Nashville and Atlanta. It's still a seller's market, right? So people want the most out of their homes. And so sometimes when you ask for closing costs and things like that, it puts you at a disadvantage. So the advantage of going with a company like these two that I'm going to tell you about is they pay cash and they don't ask for closing costs, which is huge. That's going to put your offer at the top of the pile. So let me get into it. We'll start with Home Partners of America first, since I'm here in Tennessee. Now, Home Partners of America is in Tennessee and Georgia, both places which I'm licensed. So I will go ahead and start with Tennessee. The other program I'm going to speak to you about, Divvy, is not in Nashville. It is in Memphis, but not Nashville, and it's also in Atlanta. So I'll speak a little bit about both and the advantages of both. We'll start with Home Partners of America. So like I said, Home Partners of America, they are pretty much a group of investors. They will purchase a home you like. So let me show you some homes. Let's see. Here we go. So on their website, they give you, these are homes that are listed on the MLS that they are willing to purchase for you. And the thing I like about this, so say for instance, you like this one here, 733 Jaywood in Old Hickory, Tennessee. It's a 4-bedroom, 2.5 bath. It's listed for $282,900. So they tell you what your estimated rent is, $1,890 a month, but they also break it down here. And they tell you year 1, year 2, year 3, year 4, year 5. Now, the rent will increase monthly. So, not monthly. Don't freak out. Annually. But the thing is it's a structured increase. So, it's only going to increase about 3.5% per year. So, you're not worrying about people jacking up the rent or an investor trying to come in and buy your home. Because the market has gotten crazy, you have the option to buy your home from them within 5 years, which is huge, right? So this could be your forever home. If you just need a little bit of help or a little bit of time to get a down payment, you can rent for these 5 years and then you can purchase, or you can go ahead and not purchase and cash out. So that is really cool. And so you basically would get with an agent like myself. I will show you the home. We'll go in. It's basically like a traditional sale. So as far as security deposit, Home Partners of America requires 2 months rent. So you just multiply this number 1890 times 2. That's your deposit. And we pretty much go through the whole inspection period, all that, just like you're going to buy it. But like I said, Home Partners of America will buy it. They will be on the deed, and you will pay them rent per month. And like I said, you can buy it anytime. You are locked in for a minimum of 1 year, but you can, like I said, you can after that 1 year, you can purchase the home at any time. If you get a windfall of money, you can go ahead and purchase it, and it's your house that you picked out, that you decorated, that you made your own. And like I said, that's huge. So I'm sure you're wondering, what are some of the qualifications? I have some information here. Let's see if I have. Okay, here we go. So in order to get into this program, they want you to have a household income of at least $45,000. I'm not sure if the credit requirement is. Let's see if it has on here. It doesn't have a credit score. But I know with Divvy, they require a 550. So, I mean, also for a loan, a conventional loan, you would need you would need a 580 minimum to get FHA. So these start a little bit lower with the 550 credit score to get in. You have the deposit, and then you start paying rent. Now, with Home Partners of America, they tell you from the time you sign a contract with the seller and close, they estimate it's going to be about 5 weeks. And after you close, they also will take about 15 days to go ahead and make any repairs on the property. So they want to make sure that you get into the property, that everything is working properly, and you're good to go. So they will do all those things for you, okay? So that is Home Partners of America. I really like that program. I really like that you can go in and they tell you up front what your amount is. So when you go ahead and apply for it, you'll go ahead and when you start searching, you'll see exactly how much you're paying. And they will tell you how much that you qualify for. So you'll get pre-approved and you'll get qualified, and then we'll go shopping. And you can go shopping with me on this website. I really love their website. So let's scoot over to Divvy real quick. So Divvy, here are their qualifications. A minimum FICO of 550, currently employed or have other steady income. So with a loan, you will need 2 years of continuous income with the same employer. With Divvy, doesn't look like you need that. A maximum monthly debt to income ratio of 50%, including a potential Divvy Homes payment, which is good because most loans, I think, usually don't go over 40%. Debt to income. No evictions in the past year, and no bankruptcy in the past year. So it's very similar to getting qualified for an apartment, right? So those are the qualifications for Divvy. Now their down payment is 2%. So like I said, this is for people who are very well qualified for a traditional loan. However, they have just high debt ratios, right? So they have the money to pay a traditional, purchase a home or a lease, but they just want to own their home. So Divvy has what's called equity credits. Equity credits are basically where it's a forced savings account. So their rental payment is a little bit higher than Home Partners of America because they are basically helping you save for your down payment. So basically 75% of your rent is for rent. The other 25% is to save for a down payment for you when you're ready to purchase the house. So when you go ahead, your security deposit is going to be 2%, which is considered equity credits, right? And that goes towards your down payment as well. And then also each month, 25% of your rental payment is going towards these credits as well. So that's huge as well. You have 3 years in a Divvy home to save up for a down payment to go ahead and purchase a home. So basically you've saved up over those 3 years. And when it's time to buy, you can go ahead and put that down and purchase your home. So you're not worried about saving. It's basically forcing you to save. Whereas Home Partners of America, your rental payment is a little bit lower, but you still have to save on your own. Divvy, you pay a little bit more, but it's kind of like paying yourself because you're investing in yourself to purchase this home. It's keeping you honest, right? So the thing with Divvy is you go in and let me see if there's anything else on here that I want to say about Divvy. Yeah, the equity credits. With Divvy, they don't have it on their site homes that they've picked out for you. You could go on the MLS. So this is the FMLS in Georgia, in Atlanta. So you could basically go on the MLS and look at any of these homes, pick a home that you love. Just say this one right here, and submit the home to Divvy and say, hey, we like this home. We want to write an offer. Same deal. It's a cash deal. They'll go ahead and put in an offer. They'll go ahead and we'll go through the inspection period. Like I said, the whole thing, they don't ask for closing costs. It's pretty much as is. And they'll negotiate repairs just like in any other deal. However, you can they will, whatever the seller won't do, they will go ahead and do after closing for you. So both of these programs are awesome, awesome, awesome programs. There's a lot more information that I didn't go over just because I just don't want to bog you down with too much information. But if you have questions about it, I'm going to put links in there where you can go to the sites and check out the application, the progress, the requirements for approval, and all that good stuff. And if you have any questions for me, please feel free to call me. I am available today. Today is kind of like a free day, so I'm working from home. I'm going to get out with the people and meet and greet and go shopping and wear my realtor tag and see if I can start some conversations. That's part of real estate. You got to constantly be meeting people and seeing how you can help out, right? So feel free to give me a call, 615-293-0596. Once again, 615-293-0596. You can go to my website and schedule an appointment with me, DionHarris.com, or you can shoot me an email at realtordion@gmail.com. I hope this information was helpful for you. And like I said, feel free to reach out with any questions, and I will see you guys soon.